Good morning. I'd like to call to order the MARTA Audit Committee. And the first agenda item is the approval of the August 21st, 2025 Audit Committee meeting minutes. Can I have a motion and a second? It's been properly moved and seconded. Do we have any changes or any questions about the minutes? If not, please vote. The minutes have passed. The next item on our agenda is the MARTA Annual External Financial Audit for fiscal year 25. And Brad Shell, partner with Crow LLP, is here to give us that update. Good morning.
Well, good morning, Chair Hartage and Vice Chair Frierson, CEO Hunt, and committee members. My name is Brad Shelley. I'm an audit partner at Crow, and pleased to be here with you this morning to give you an overview of the results of the external audit that we completed this year. Oops. So wanted to start out just providing a quick overview of kind of the objective of the audit and the scope of work and what that entails. So the objective of our audit procedures is to provide an opinion on the financial statements based on our testing. The financial statements themselves are the responsibility of management, and our responsibility is to provide that audit opinion. The scope of work is obviously to go through our testing of the financial statements and determine whether they are free of any material misstatements. In addition to that, we're also reporting on your National Transit Database information, your submission there, and we do an agreed upon procedures related to that. And as part of the financial statement audit, we also complete a single audit, which is really testing the federal grants that you expend during the year. And I'll touch on that a little bit more later. There was 2 new accounting standards this year. GASB 101, compensated absences, which did have a pretty significant impact on your financial statements, about a $34 million increase in liabilities. The high-level overview on this is compensated absences includes any time off, essentially. So any vacation time, sick leave, etc., any other types of leave that you might have. And what changed in the accounting standard was previously you only recorded a liability for any type of leave if it had been earned and if it was going to be paid out.
Mr. Shell, I'm sorry to interrupt. Yeah. Could you pull the mic a little closer so that folks who are online streaming?
I'll try to lean down, I guess. Is that better? It doesn't seem like. Can you hear me? Okay. I'll just try to lean down like this the whole time then. Okay. Okay. I will be louder then. So the change that happened in the GASB is that it required you to accrue for any potential liability there for leave that is not only going to be paid out, but is more likely than not to be paid out or used. So in the case of certain types of leave, sick leave is the most common example where maybe it's not going to be paid out upon exit. It's still going to be used over the course of however long they're here into the next year and into the future. So that required that liability to increase, and that's why you see a $34 million impact. It's not a cash transaction. It doesn't have any change in what you're paying out. It doesn't change your policy. It just simply changes how much you have to accrue of that as a liability and when you're recognizing that. So it's more of a financial statement only transaction. Is that better? Can you hear me okay at this? Okay, perfect. The second one that you'll see listed here is GASB 102, certain risk disclosures, and you'll see there was no impact there. We did, along with management, evaluate that as to whether there was any need to add any disclosures. That's looking at any risk uncertainties, concentrations of revenue sources, things like that, that might need to be disclosed, and management determined there was no need to disclose anything there, and we agreed with that premise. A couple of other items of note here. There were two major federal programs tested this year. As part of that, though, the single audit you'll see here can't be issued yet. So the OMB every year issues a compliance supplement that really guides primarily the auditors on what we are required to do, sets the guidelines for the specific type of testing for the different programs, and that has not been issued yet. So they have issued a draft version back in the summer, and that's what we use to perform the testing. So we have completed all the testing based on this draft version, but the AICPA has strongly recommended that no firms issue the compliance reports until the final version is issued by the OMB, just in case they come back with some changes from the draft version. I don't have any insight as to when that might happen. We were originally hopeful that would happen in August or September. Then with the federal government shutdown, I think that probably hindered things a little bit. And then since then, we haven't heard any news on that. So hopefully it'll be soon, and we'll be ready to issue as soon as they issue the final compliance supplement. But at this point, we cannot issue that. We can still issue the rest of the reports, including the financial statements and the ACFR, though. So just to be clear on that. Just real quickly on the audit approach, you'll see here, we touched on this if you were here previously in, I think, May when we went through the planning. This is just kind of really high overview of the process. So we start with planning the audit back in really a March, April timeframe. We do some interim testing later into May. Then we complete the bulk of the testing in September, October timeframe, and then we wrap it up with the completion and the issuance of the reports shortly after this meeting. Some of the information or some of the testing we do is listed there, as you can see, kind of the timing of that. Nothing's really changed as far as how we went through that process from what we talked about earlier in May. As far as the actual deliverables, you'll see those listed here and kind of broken down into three different sections. The upper section there is specific to your financial statements, call your basic financial statements or your ACFR. We provide an independent auditor's report. We are providing an unmodified opinion on your financials, which is what you're looking for. That's a clean audit opinion, and your financial statements are free from any material misstatements. We also provide a management letter and a SAS 114 or audit communications letter. So I think you have draft versions of all of those. The middle section is specific to the federal compliance audit that I mentioned earlier. So we issue two reports there. One is in accordance with the government auditing standards, and then the second one is compliance over each major federal program. And as I mentioned, we had two major federal programs to test this year. And then we provide an in relation to opinion on the schedule of expenditures of federal awards. The bottom section is an agreed upon procedures report that we perform related to the National Transit Database statistics form, as I mentioned earlier. That is required by the FTA. And then the last one is a data collection form. We assist in the submission of that to the Federal Audit Clearinghouse. Normally that would be done, in the next few weeks. That also cannot be done until we finalize the single audit of the federal compliance report. So that'll happen a little bit later this year. As far as the audit results, I already mentioned we did provide an unmodified opinion on the financial statements. For the federal compliance audit, we have an unmodified opinion there as well related to the federal programs. We had no material weaknesses or significant deficiencies in internal control related to either of those major programs. We did have one significant deficiency, as you'll see here, related to the financial statements, and we'll talk about that a little bit more in just a minute. No instances of non-compliance or question costs, and then related to the NTD procedures, there were no significant findings disclosed there either. So overall, a fairly clean audit, except for the one significant deficiency, as I mentioned. Fraud considerations, this is another discussion point that we had during May during the planning. We do go through a number of procedures here. We are not performing a forensic audit, which would go into much more detail, but we do certain procedures to try to identify if there's any material instances of fraud. You can see some of those listed here, and the key thing to note is we did not identify any issues of fraud based on our testing. I have a couple of slides just give you a little bit of very high level financial information, and it may be a little bit hard to see here on the screen, but this is if you're looking at your statement of net position. Assets and deferred outflows are there on the left-hand side for the past 3 years. So you can see that your assets and deferred outflows are higher than they have been in the past few years. So that's a positive that you can continuing to see that trend in assets. And a lot of that is continuing to invest in infrastructure and continue to have additional capital costs. And you're seeing those as capital assets. On the liability side, you're seeing that did increase a little bit. Some of that is what we talked about with the compensated absences, as there's an increased liability there. Some of that may be related to OPEB and pension liabilities. That continues to fluctuate year to year. And then your net position, which is essentially your equity, that has been pretty even. So a slight decrease this year, but still around $1.6 billion in net position. On this slide, you can see the statement of revenues, expenses, and changes in net position, or your income statement. The operating revenues, that includes essentially your fair revenue. It's hard to really see there because it kind of gets skewed by the rest of the numbers, but actually did have an increase of about almost $4 million this year in operating revenue. Your expenses continue to increase as rising costs of inflation, personnel costs, things of that nature continue to increase. So that's up to about $1.15 billion in expenses. Your non-operating revenues did increase this year. The thing to point out here, if you look back 2 years ago, fiscal year 23, that's when you had more of the COVID dollars still remaining. And so you were still drawing down federal grant dollars from that. Last year that dipped down. This year you're seeing an increase again, primarily related to sales tax revenue. Capital grants listed there increase. That really is just driven based off of timing and the capital projects you have going on, about $83 million this year. And again, your change in net position, it was pretty even this year, a slight decrease of $24 million, or a slight net loss of $24 million. And again, that fiscal year 23 is a little bit of an abnormality because of the COVID dollars that were available at that time. And wrapping this up, a few required communications here. We are independent from MARTA, so we're not performing any other services that might impact our independence, which is important as us providing an independent auditor's report. No significant new accounting policies. As I said, there was a tweak to the accounting policy related to compensated absences. The policy itself didn't really change much as far as the wording. The dollar amount, obviously, we talked about. Accounting estimates, there are a number of those. We did include in here the accounting estimate related to that accrued compensated absences because there is some estimate involved as far as determining how much of that time off is going to be used or paid out. No other significant concerns or judgments listed here. As far as corrected and uncorrected misstatements, We had no corrected misstatements, so that would be any adjustments that we identified through the audit process that were posted by management. We did have one uncorrected misstatement, which was related to the significant deficiency that I mentioned earlier. And that was uncorrected solely just due to the timing of trying to, when we were able to get that resolved. Some of you may be aware we had initially submitted some drafts and we were still working through that difference at the time and weren't entirely sure what the result was going to be. Since we provided that initial draft, we were able to work with management and nail down that number. So there was about $17 million of federal grant revenue and receivable that hadn't been recognized that should have been. And so this is another one of those instances of timing. So it doesn't mean there was $17 million of federal grants that you weren't going to draw down or that you weren't going to collect. This is really a timing of when you were recognizing that revenue. So with the vast majority of your federal grants, they're cost reimbursement in nature, meaning when you spend those dollars, you are then able to draw down those funds. And in this case, there was about $17 million of expenditures that were on your CFA that were appropriately on your CFA, that you had expended those dollars. You just hadn't drawn them down yet from the federal granting agency. And so what should have happened was you should recognize revenue and have a receivable for that $17 million. And then when you collect it later on in the next fiscal year, you would just reduce that receivable and you would have already recognized the revenue in fiscal year 25. So it really is just a timing of when you recognize the revenue, no cash impact from that. But nonetheless, because of the dollar amount of it, $17 million is pretty significant. We did have a significant deficiency for that, and that's the significant deficiency we talked about earlier. So I did want to maybe pause there, or we can wait for questions at the end. I don't know if there's any questions around that now or how you want to handle that. But
You can keep going. We'll do questions at the end. It's
okay.
Typical MO.
Okay. As far as any other communications here, you see no other matters noted. We didn't have any significant difficulties or disagreements with management. Even as we worked through this, there was no disagreements with the finance and accounting team. It was just a matter of trying to figure out exactly what the dollar amount was, as you have a number of different federal grants. And so we were trying to make sure that we had that nailed down. And they were good to work with as we worked through that issue. Oops. This is a little bit touchy. The last thing, we always try to provide a kind of a look ahead at what's happening and what may impact you into the future. There's 2 new accounting standards that'll be implemented next year. GASB 103 related to financial reporting model improvements. That is likely to only have an impact on some of the disclosures in your, primarily in your management discussion and analysis section of the financial statements. So potentially some additional information included in there, maybe a few other tweaks, but I'm not expecting there to be any numbers changes as a result of that. And then similarly with GASB 104, certain disclosure of certain capital assets, there may be some additional disclosures related to some types of capital assets. But again, not any changes in how you account for those. So those are the couple of things that are on the horizon. I think overall, though, the audit process was a good process. Management was ready, had information available to us. I know we had a little hiccup towards the end as we were finishing up our final review and trying to nail down that dollar amount on the grant revenue reconciliation. But outside of that, everything was a good process, and really appreciate the finance and accounting team for their preparedness and providing us information. I think I say this probably every year, but we request hundreds of documents from them, and it is a pretty heavy lift for them. And especially this year, I know they had other projects going on internally, so it was we appreciate their assistance through that process. So with that, concludes my presentation, but again, happy to answer any questions anyone might have.
Well, thank you so much. It's always good to have another set of eyes looking at all this issue, so we appreciate that. So before we ask if there's any other questions. You can just assure us, or maybe Mr. Zanoff, that we come up with a plan going forward that this $17 million issue is not going to occur the same way in the future.
Yeah, I think they have provided, I think in their draft reports that you have, there's a section there for management's response. Because of the timing, they hadn't dropped that in there yet, but they have already provided a response on that they plan to add a reconciliation process. They're going to have a review process to make sure that's not, it doesn't happen again.
Okay, thank you very much. Mr. Frierson.
Yeah. Thank you, Brad. I appreciate it. I know you're here every year since I've been on the board, and you've done a great job in giving us a real fair snapshot of how we're performing high level. So I just have a couple of questions. I'm going to start with the GASP 101 concerning the accrual of sick leave and vacation leave. This is something that, now, has this been in place prior to this year, or is this just new for this year?
This is new for this year. Yeah.
Okay. So what I'm basically hearing is that when sick leave or vacation leave is given to an employee and they do not use it, and at the year end or our financial year end, that amount that hasn't been paid out needs to be reconciled or need to be recognized.
Now the vast majority of it does. So
Okay.
previously, sick leave or some of the types of leave, if it wasn't going to be paid out, you didn't recognize it because it may or may not get paid. Now under this, GASB has said, well, it's not just whether it's going to get paid. If they're going to potentially use it in the future, you need to recognize that as a liability as well.
Okay.
So that's what's changed.
And so that I understand. So what if it's not used? What if something occurs and the employee is discharged unfavorably? Or what if something says that we are not going to honor your vacation or whatever?
Yeah.
How do we receive the adjustment for that type of loss? And I mean, we're taking expenses here, but now how do we take the credit for not giving it out, I guess what I'm asking.
Yeah. So a couple of things. I'll start with, it doesn't change, again, any part of any payout. It doesn't obligate you to actually pay any more out to anybody that you weren't obligated to before. The second piece, from an accounting standpoint, this is really an adjustment that's just made annually. Mm-hmm. So everything that happens during the year, as people come and go, employees come and go, leave may be paid out or used, more leave is accrued. It's really just looking again at the end of the year and saying, okay, what are the balances as of June 30th, and then projecting, how much of this, and it's really an estimate, right, of estimating how much of this total potential liability needs to be recognized right now.
Okay.
And so that it's really just a one-time adjustment. And to your point, it could go up or down. So this is like a lot of those other annual adjustments, not too different than like a pension liability, right? Where some years it goes up, some years it goes down.
Right.
This would be similar. So you could have years where the expense actually goes down because that liability goes down.
Okay. It's paid out or whatever's happening.
Or paid out or is forfeited or whatever the case, yeah.
In a snapshot. All right.
Yep.
I understand. All right. My next question has to do with the $17 million. I know that we're addressing that. And so when grants are, and help me understand again, I just want to make sure I understand. When grants are issued and we are using the grant for a project, we didn't receive any money, right? We're spending
Correct.
our money for the grant.
Correct.
Because we're going to get reimbursed for it.
Generally speaking, yes.
All right. And so when that happens, you recognize the grant as revenue at the time that we get the grant?
No.
You do not. You recognize it as an expense?
So when you are awarded a grant, there is no financial transaction.
All right, that makes sense to me. 'Cause
Yeah.
Nothing's happened yet. Okay, I
Right.
understand. All right. All right.
So then when you're awarded, there's no transaction. As you start to spend dollars and allocate and say, we're going to use these dollars, this is we have federal sources for these expenditures. So now you're tracking those. Let's say you spend $1 million. At that time, and it really just comes to a cutoff. During the rest of the year, you may not do this, but again, at the end of the year, if you spent $1 million on that grant, you could submit a request for reimbursement at that time for that $1 million because you've obligated, you've fulfilled your obligation.
Right.
You've spent the dollars. They just need to pay you the $1 million. And that's what was missing on some of these grants was that recording of a receivable, and you'd recognize revenue at that time. And then in fiscal year 26, let's say you do the draw in December of this year, and they pay you, you're just going to reduce that receivable and receive the cash. So it wouldn't impact your revenue for fiscal year 26 because you already recognized it for fiscal year 25. So it's really kind of, there isn't a, generally speaking, there's not a matching principle within GAAP, but for cost reimbursement grants, there typically is a matching principle there where if you've spent it, you also have revenue for it.
Okay.
So it almost is it is really a net zero transaction.
Okay, great. And I just ask questions so that the public can be able to understand how
Yeah.
we view those types of transactions and understanding the impact of it. So that was great.
Yeah.
And my final question has to do with, so we're going to have a delay with reporting this particular finances. Is there penalty involved in this delay in reporting?
No penalty. And again, just to clarify to everyone and to the public, so the ACFR, your financial statements, that'll be issued like it normally is. So we'll be able to issue that here in the coming days. The NTD agreed upon procedures, that was already issued on time. So the only thing that won't be is that single audit reporting package, which relates to your federal grants. And that is, everyone is having that same delay across the country. No one is issuing those. So no, I mean, I guess I can't say with 100% certainty that the federal government won't make up some rule or put some penalty, but no, I think generally speaking, and in past, around COVID, there was some delays, and there were no penalties or anything for any late reporting for that because it's because of them. Okay. And so we're ready. Like I said, we have performed all the testing. If they provide a final compliance supplement in the next week, we're ready to issue immediately after that.
Okay. All right. So. Great. All right. Thank you. I appreciate the clarity.
Yeah.
Mr. Locke. All right. Mr. Pond.
Brad, I've got a balance sheet question. And we have a large capital assets, properties that'll be replaced in the near term. And I'm thinking of the rail cars, for instance. Over the years, I assume they've been depreciated to zero, but I could be wrong. How are we treating that asset today and when we transition to the new cars? I'm talking about the existing.
Yeah, so any existing car, and I don't remember offhand which assets have been fully depreciated or not, but yeah, if they are, whether they're fully depreciated or whether they still have some useful life on them, if you end up replacing those, they would just be removed from your financial statements. If they still had some useful life left on them, then there, might be some loss, and depending on what assets they are, if you're able to sell them, you may have some proceeds and maybe you end up with a gain. But that's generally how those would be handled. They would just be disposed of from your listing, and you would add in the new rail cars or whatever it may be.
Maybe this is a meal question. I was just curious, 40-year-old cars, how they're carried on the balance sheet. I guess that's my question.
The 40-year-old cars are going to be wherever they're at in their useful life. So if they're, I don't remember the useful life that you have for them.
Yeah.
I don't know if
What,
25?
chime in? Yeah, the rail cars should be past their useful life, but to the extent they aren't, they're just as Brad identified. But then if there's FTA interest in them, which is a little separate, the
Right.
FTA interest would be transferred to another one of our assets to be, and the FTA interest would be fully depreciated out. So it's kind of two levels of depreciation.
Yeah, and so if Cynthia was mentioning they're at 25 years, so they should be fully depreciated, all of those. So they'd be at zero net book value.
I would assume so.
Yeah. Sorry, I just couldn't remember exactly where they were at. So,
Any additional questions? Thank you very much.
thank you.
Excuse me, Madam Chair, I just,
Oh, Ms. Scott.
Oh.
Okay.
he answered the majority of the question I had through Mr. Frierson's question, but under the compensated absences, the 34.1 million, are those absences verified by category, for instance, FMLA, illness paid, or how do you determine specifically how they're broken down?
Well, it's looking at the different categories, and really primarily looking at the more significant or material ones and ones where they have actually accrued something. So for like FMLA, they haven't earned that. That's just a leave that you get if you need that leave. This is looking specifically at types of leave that you actually earn. So that's why I said it's usually vacation time, sick leave. Those are the most common, most significant ones.
Accrued absences?
Yes.
Thank you.
Yep.
Thank you very much.
Thank you all.
Next, we're going to have an information security briefing with Lawrence Williams.
All right. Good morning, Chair Hartage. Guess you have to lean over. Doesn't sound like it's on, so I'll just
Yep,
project.
you sound, I can hear
Okay.
you. Just keep doing it just like that. You're good.
Thank you. So good morning, Chair Hartage, Vice Chair Frierson, Mr. Hunt, Ms. Allen, and other members of the board. I am Lawrence Williams, the Chair of Information, Chief of Information Security here at MARTA. Today, I'll walk you through the strategic steps we've taken from investments in technology to partnerships with federal and local agencies to ensure MARTA remains one of the most secure and reliable transit systems in the country. As we prepare to host one of the most high-profile events in the world, MARTA's cybersecurity team has implemented a strategic plan to strengthen cyber resilience across all areas of the cybersecurity portion of our transit ecosystem. To put our spending in perspective, MARTA is ranked as a medium-sized transit authority. The budget allocation for the Information Security Department is on par with other authorities comparable in size. MARTA's approach is grounded in three key pillars: investments in infrastructure and personnel, expanding relationships with our industry partners and local authorities, visibility and trust. Each of these pillars support our overall readiness posture. We're investing heavily in technology and people, deepening relationships with law enforcement and critical partners such as Microsoft, Dragos, and many others. Because of these investments, we have been able to improve visibility into every network system, both on the enterprise and operational technology portions of our environment. We have not been preparing for the World Cup in isolation. MARTA collaborates with the Department of Homeland Security, the Transportation Security Administration, and the Cybersecurity Infrastructure Agency, in addition to various local partners, to ensure a unified threat response capability. This ensures MARTA's cyber posture is aligned with the Atlanta region cybersecurity strategy for the World Cup. Last month, during the month of October, we celebrated National Cybersecurity Awareness Month. We had partners from CrowdStrike, Google, and Microsoft attend 3 different authority-wide lunch and learns where they discussed various aspects of cybersecurity. These events were informative and insightful. We were able to highlight many aspects of cybersecurity to MARTA employees across the authority. Our investments have not been abstract. They have been tangible and measurable and transformative. Over the past year, we've expanded our Security Operations Center capability. We now are able to provide 24/7 visibility across both IT and operational technology. We now have the tools that are able to detect, isolate, and mitigate threats in seconds, not hours. Ensuring operational continuity across fare systems, our transit control system, and our enterprise environment. People remain our strongest line of defense. We've expanded our internal cybersecurity team and created an internship and workforce development program that prepares college students for real-world cyber defense work. Continuous training ensures our professionals and the next generation are ready to defend MARTA's infrastructure before, during, and after the World Cup. Because of these investments, we've evolved from reactive response to proactive coordination. MARTA now conducts cyber tabletop exercises and executive-level cybersecurity discussions. During our most recent discussion, we had the CEO of Dragos attend, Mr. Robert Lee, who is a recognized authority in the industrial cybersecurity community. He is regularly asked to brief national leaders. He has testified to the U.S. House of Representatives and to the U.S. Senate to advise on policy issues related to critical infrastructure cyber threats. All of these efforts have contributed to our ability to refine our incident response operations, our playbooks, with granular focus on ransomware, insider threats, and operational disruptions. So I want to say thank you for all the continued support from the board and MARTA C-Suite. We will continue our department's mission to build a culture of cybersecurity awareness, collaboration, and innovation, ensuring the safety and trust of every MARTA passenger. Thank you. I will now
Thank
take any
you for
questions.
your wonderfully vague presentation. We understand why, and we appreciate all that you're doing. And so with that, I think we have a question from, I'm going to see if this is right, Galisa? Did I say that correctly?
That's close enough.
Okay.
Hi, good
Sarah.
morning. Just had a question, something that we've done in our company. Our cyber team sends out fake spam emails to all of our employees. And if they click on the link, then it says, you know, this is cybersecurity testing your awareness of these things. And it has really driven every person to be more aware. I was curious if you've implemented something like that here.
Yes, we've been doing that for a while. Actually, yesterday, in one of my department meetings, we were talking about implementing AI to assist with that. So we are really on the leading edge of that. Our program is with KnowBe4, and we actually partner with them so our phishing campaign is very unique to the individuals and to the authority. So it's not general at all. You will see if you communicate with, let's say, you know, a banking institution, you may see a phishing email that is similar to what a banking institution may send.
Anyone else? Thank you very much.
All right, thank you.
So next up is going to be our internal audit activity briefing by Emil Zanoff. Welcome.
Thank you. Good morning, Chair Hardage, Vice Chair Frierson, Mr. Hunt, and members of the MARTA executive team, board members. Good morning. My name is Emil Zanoff. I'm the Assistant General Manager of the Internal Audit Department. I'm here today to give you a brief overview of our internal audit activities for the fiscal Q1 of FY26 from July 1st to September 30th, 2025. As we normally do, we will start with the operational audit group. During the quarter, we kicked off a number of audit engagements, and I'll go briefly through each one of them. The first one is still in the planning phase, but that's an advisory engagement on our 2026 World Cup preparedness. We'll report on this one at the next audit committee meeting. We also kicked off a regular assurance engagement about our alertness assurance policy compliance. This area has a lot of regulatory compliance, but more importantly, it has a significant impact on the employee and our patrons' health and safety. So we were interested in looking into that, and we'll report the outcome at the next audit committee meeting as well. Oracle, Primavera, P6, and Unifier, and I'll need to clarify why this is important. These are IT systems that comprise the backbone of our capital program. And because of the huge size of our capital program, we need to have that robust infrastructure to manage it professionally and smoothly. Just like everything else in life, it relies on IT infrastructure and applications to kind of run smoothly. The next one that we kicked off and completed was a new rail car delivery readiness. This one came out clean. It was an advisory review, and I want to distinguish between advisory and sort of compliance and assurance activities. The advisory reviews, you will typically see those in projects that are still in flight, that are still being implemented, and we want to kind of go and see what's going on and possibly provide some recommendations where they can still be fixed as the project is being implemented, versus the more typical assurance engagements, which is the vast majority of our internal audit work, which reviews a specific standard and then compares what's going on in the field to that particular standard. That could be a regulatory piece of legislation, or it could be internal policy, or both of them. So with the new rail car, it came out, without any major issues. We feel like we're on the right gliding path to deliver on the commitments that we have made publicly. We had one recommendation that was rectified in the process of the engagement, so it's not listed here. We will probably go back and do a phase 2 in the January-February time frame, kind of before the authority kind of crosses that finish line, just to kind of continue to keep an eye on what's going on there. Finally, the capital program follow-up. This was sort of an audit of our centralized PMO office. We've talked about it at many prior audit committee meetings. This audit was performed by a specialized construction audit firm called Towson Solutions that specializes in capital projects in the transit and generally the transportation industry. They identified 2 significant findings and 4 moderate findings. The 2 findings were related to the fiscal year budget allocation process and also project expenditure and encumbrances integration, which is something that kind of tends to slow down the execution substantially. We have received what I would deem satisfactory management responses from the capital program team. And as we normally do, we will follow up with them to make sure that the corrective action plans are being put in place in a sustainable manner. The due dates you can see on the slide, December and March of next year. Prior operational audits, these are audits that we have talked about before. They have due dates at the end of October, November, and December. The Summerhill BRT, we have to verify that the corrective action plans have been completed, and we'll probably do that in the next 30 days, and then we'll report back to the audit committee whether they have been completed or they're past due. The other one is the rail station management audit. Again, we had 2 significant findings that are on the slide around specific station emergency procedures and also station monitoring and reporting. We'll report those as we verified the completion of those action items. As you all know, my department actually goes deep into verifying completeness before we show up and mark them as complete. The 2 other audits from prior periods are in the same bucket. So I think when we meet at the beginning of 2026, there should be a lot of discussion as to whether these corrective action plans have been completed or not, because we have a lot of due dates, basically in the next 2 months. Overall, 13 significant findings, of which 3 were closed, 10 are still in process, and we'll hopefully clean a lot of those up by the next audit committee meeting. Information technology audit performance by my IT audit group. We initiated an advisory review of the Better Breeze, or AFC 2.0. We'll report on that to management hopefully at the beginning of December, and to the audit committee at the next audit committee meeting. That's an advisory review because this system is still being implemented as we speak. And then the next IT audit, which is very heavily focused on cyber protection, is called end user security reviews. This is like the end user access to various different systems at MARTA, primarily or exclusively, I should say, in the MARTA Enterprise Network part of the IT domain. Prior audits, one is operational technology access management. That's the other part of our IT infrastructure. 3 findings there from the prior period that are still in remediation stage. The other one that software maintenance, IT closed one issue, and they're about to close 2 more of the significant findings there. And then the final one, elements of IT operations, and I apologize every time, and I'll apologize again, I have to be vague. Because anybody can take what I say here and use it for nefarious purposes. So because these things are related to the safety and security of the authority, we're having very heavy discussions on the remediation of these findings. And Rhonda's here, she probably wants to hear less of me, but we have regular meetings with Miss Allen, with Lawrence Williams, and with Tyson Morris to make sure that we report accurately to the audit committee, number one, and number two, that we're actually gaining traction in those areas. So I'm hoping that the audit committee will give me a level of trust to stay vague in these meetings as it relates to cybersecurity. The contract audit group, we issued 25 audit reports. There were no exceptions in our overhead rate reviews, which I think is the result of our continuous and ongoing rate reviews. So our vendor partners learn that they need to be clean when they submit their overhead rates for our review, and they have to be compliant with federal acquisition regulation provisions. On our cost and cost price and change order reviews, there was about $2.9 million in unsupported costs that we identified across several audits. We exited the quarter with another 25 audits. This is a group that has very high output. It's busy all the time. We get them, we process them, and we take them out to primarily capital improvement program and our procurement department so they can complete their work and come to the board for permission, et cetera, et cetera. Finally, our fraud, waste, and abuse summary. We investigated 3 allegations. One is still ongoing. The first one, allegation of fraud in the disposition of assets. The second one was substantiated. This was an allegation of unethical behavior by a superintendent. And then the final one was an allegation of nepotism, which was not substantiated. So with that, I will conclude my briefing today, Ms. Hardich, and I will return the floor to you.
Mr. Hunt.
First, thank you very much, Emil, for the board. I think we'll go ahead, we can, for the items that he was a little more high level with, especially with new members, we'll go ahead and put an executive session on for the next briefing out, so you can, and then in cyber, both can go much deeper. We didn't notice that this time, but we will for the next 2 meetings, so you guys can go deeper. But other than that,
We just have to go into executive session for any questions like that. Ms. Jones?
So each audit, I've noticed that there have been project management plans on the operational side that are not updated, or processes that are not correct. What is being done to remediate that?
So let me just go back. Let me go back to the slide. Hold on. Okay. So management's put a lot of documents in place to ensure that the controls are a little bit better. We haven't looked at all the detailed documentation they have submitted. I'm assuming you're talking about Summerhill in this particular case.
Not Summer Hill specific.
Mhm.
I mean, it says Summer Hill, it says Clayton, and previous audit
Mhm,
debriefings. It's been other areas of operations.
Right.
So it seems like there's a larger systemic issue, and so what is being done to remediate that?
They've included a lot of additional policies, procedures, and guidelines that were designed and developed by the Central Project Management Office. So in terms of providing clear guidance to the project managers in the field, I think all these documents are there. So hopefully, as we audit more and more of these projects, we will not see this anymore because there is authoritative guidance of how to do this stuff and an expectation that they should be done. But the reason we're keeping this here is because we want to make sure that specifically for Clayton County, which is the audit that we did, and specifically for Summerhill, which is the audit that we did, we want to see the actual output. So now we've got all these policies, procedures, and other guidelines that they need to focus. We want to see that these two were fixed, and then as we audit more of these projects going forward, because we will, and you'll see those in upcoming audit committee meetings, I'm hopeful that we won't see exceptions here, because we can write all kinds of policies. If people don't do it, they don't do it. So we'll continue to test this area, but hopefully we will not see exceptions because now the policies and procedures are in place.
If I may add, good morning, Ms. Jones. As of September of this year, capital programs falls up under my, in one of my divisions. I haven't had an opportunity or haven't taken the opportunity just yet to really dig into what the issue is around why the policies or why the management plans haven't been updated, but I give you my word that I will. And if it's a matter of it exists but it needs to be updated, that just means someone needs to take time, if it's a monthly basis or quarterly basis, and update the plan, and that can be managed. It may just be simply, it's a piece of paper and we're not going back to it as often as we should and looking at it as often as we should. But I give you my word that we will look into that matter and come up with a process that allows us to stay up to date. Yes, ma'am.
Mr. Pond?
We've had this discussion in the past several times, going back years ago. My question is, when you identify these things, whether it's an operational issue, an IT issue, or a capital programs issue, and we have dates that things are not completed as you'd originally projected. Some of that is budget issues with buying equipment, whatever. But do we have a culture where that information is given to management and management owns completing that task or fixing that task versus your group owning it? Because to me, the people in charge of those programs need to own the issue and execute the remedies. So I'm just saying, are we getting to have a process we share this to the team?
Absolutely.
So
So
it gets done.
absolutely. So we share this immediately upon the issuance of the audit. Oftentimes we'll share the findings throughout the audit. So if it's something relatively easy to fix, they can fix it during the audit. Because I tell my peers in the management group that I don't get paid by the finding. So the better controls we have, the less I have to write in the audit report. But the answer is yes, we communicate that to the management team, but then we constantly follow up because sometimes we get a very robust answer in terms of remediation. On occasion, we have disagreement with the people in the field of what remediation should look like relative to the risk that we have identified. And on occasion, we have to escalate to C-level members to get that kind of a common understanding of what the remediation would look like. So yes, the management team is responsible for fixing the problem, but we also stay quite involved throughout that process for two reasons. I would hate to come here with a surprise, and all of a sudden we have disagreements or we have past due findings and things of that nature. We, including me, try to minimize that as much as possible ahead of time. So by the time we're here, we have truly things that are difficult to implement. But we stay very involved throughout that corrective action plan to get updates as to where things are. And whether the things are the way that we think will get us through the finish line, because, you know, if we're in July and we have a finish deadline in September and nobody has started anything, I know we're not going to get there.
Right.
And we need to kind of have more frequent conversations. But sorry for the long answer. Yeah, we do turn this over to the management team as soon as we identify it.
Well, the correct answer is the management team owns the issue.
Absolutely.
We're going to give a little more succinct. When the audit report comes out, they come out to a select group, and then the C team, as well as the appropriate members of our executive management team, the EMT, if it's in their department, and they are charged with resolving the findings in the audit report and followed up upon, obviously by audit, but more importantly by that department.
Okay, I'm going to go with Sarah.
Perfect. Call me Sarah, anytime. Just a little bit expanding on Ms. Jones' question, because I'm new to the board. Have we done these operational audits in the past, or is this the first time that we're doing them like this? Like, or if we have them in the past, did we see similar results?
So these are not repeat findings. These are the first audits that we've done in most of these cases. In general, probably 95% of our operational and IT audits are sort of first-time audits. There are some repeat audits that you will see over a period of time. End user access in the IT domain is one of those repeat audits because it's such an important control that we can't just rely on the fact that it worked 2 years ago. We will retest it. But a lot of these, especially in the capital program, many of them are new audits, but some of them can be repeat, like that first one of the CPMO that was done by an external audit firm. That was a repeat audit. That was the third audit in that central PMO office, because it's such an important function that we had to kind of go back and make sure we kind of are making the progress that we need to make.
And I would just add that generally speaking, Emil's team is broken up into kind of areas of expertise, right? And so there's an operations team, there's a technical team, and there's a contracts, team. And so it's kind of the way he shows some of this information. And I know they may work on different audits across the board, but the way he kind of breaks this up, at times he'll come to us and say, for next year, what is it that you think, we need to look at? What may be something that we need to kind of dig into? And as he mentioned, sometimes it's an audit that we feel like we need to do over, repetitively, or sometimes it's something we've never done before. But this is a standard process that we go through in MARTA with internal audit. And everyone is expected to cooperate.
Any more questions, comments? Mr. Frierson, I'm sorry.
Thanks, Emil. I appreciate the information. As I look at the fieldwork audits that you're planning to do, the AFC 2.0 and the end user security, when I see field audit, does that mean that you're actually going to have this advisor go out and do on-site audit of activities, or just kind of see where these things are really progressing, or is that something else?
No, this means something a little different. Fieldwork is just a label that indicates that we're in progress.
All right.
It's a technical auditing term. That's what it's called in the industry. When you're in the middle of the audit, you're in fieldwork, because back in the day, before computers, people would go out and go with a paper and do check marks and tick marks and stuff like that. So it stayed with fieldwork. Most of our work is actually computer-based, but on occasion we do go out.
Okay.
Yeah.
Well, I was going to put a plug in for additional staffing for you to do field work.
I'll take the plug.
But that's good. I want to make sure I understood how that works.
These are audits that are in progress.
They are, all right, which
Yes.
is good, because we want to keep an eye on the AFC 2.0 progress. There's a lot going on out there, and we can see it in the stations. We just want to make sure that, we're making sure that we keep an eye on the prize, and that we can make sure we give the resources needed to make sure that continues on. So that's all I want to say.
Yeah, thank you.
Thank you as well. let me just remind everyone that you have included in your packet is the, I think it's called MARTA 2025 Financial Statement and External Auditor Documents, for anyone that would like to review those as well. Anything else that needs to come before the Audit Committee? If not, we are adjourned. Thank you and happy holidays, everyone.
Thank you, likewise.